Hello, hello, hello. How's everybody doing? So I hope everybody's having an awesome day, awesome weekend. This is 50 pips in the house, 22nd, 06, 2014. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. And the fact you're listening to this means you've read, you understand, you accept all the disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So as we're going into a week, just keep in mind that Monday could be an interesting day. We've got basically HSBC PMI out of China overnight. We're going to have Crude speaking, so BOJ on the wires. And then as we go into early trade, into London trade, we're going to start having not only that BOJ on the wires, but we're going to have all the PMIs coming out. So we could see some movement or at least some interesting positioning towards the beginning of the week or starting with Monday trade. Okay, now let's look at the charts. Not a lot has changed since last week, so we're going to try and go through these quickly. I mean, in terms of the ES, as we discussed, we had that big event risk of the FOMC, and really we're talking about the fact that we expected this to continue to grind higher. The way this is moving, unless we start to get something like pretty much talk about rate hikes in the US, is probably going to continue to grind higher. Now, in terms of the chart, what we were looking at that 1900, 1925, 1950s, and we said if we break above that and we start to hold above those 1950s, we'd expect those 1975s with that ultimate 2000 that's going to be attracting. We've been talking about that for a long time. Now, usually what tends to happen, of what we've started to see recently, was that the gains or the losses during FOMC kind of, the market gave them back the following day. And what happened here is, after the FOMC and after we pressed those new highs, we got the market pressing right back into that level and holding fairly comfortably, right? So one thing we tend to see also at times, just a reminder, Friday was basically that triple witching, so expiry, and we tend to see market tends to kind of continue at least at the opening in the direction of the close, so keep that in mind too. But at the moment, really, as long as we hold above 1950s, expect those 1975s to attract. So the way we're looking at going into the week, 1950s mid, 1975s to the upside, and 1925s to the downside. No big change. We've discussed this in broader detail in some of the other outlooks. Okay, in terms of, so let's continue on these futures. Crude, what's going on Crude? Crude's still holding here. Again, 105 pivotal. We're looking for this to continue to rotate higher. We're talking about 108s, 112s, and possibly even higher. I believe in the last update we also discussed about those longer term targets into 133s, so you can look at that last outlook. But basically not a lot has changed going into the week. 108 to the upside, 105 mid, and to the downside look at those 102s, 101s, basically that trend line, and the two moving averages, at least the 100, that's going to start to move higher and will be acting as base support. Two charts which are starting to get interesting, while moves are in play, and we don't talk about these that much. Well, we talk about gold, but silver, when it's sleeping, we let it sleep. But then there's sometimes where it starts to get interesting, and here what we were talking about was basically all these chances to get long into these lows, looking for those 1820s to hold for rotation back into those 2050s and ultimately back into the 2020s, the famous or the infamous 2020s. And the way this is trading, this is completely in place, starting to rotate higher. So what I'd be saying is, going into the week, at least in terms of daily closes, keep an eye on how we behave around the 2050s. As long as we continue to hold above the 2050s, we'd say in play for rotation back into that upper resistance zone. Hold below, it could start get heavier. We'll have to see if we get 50 backs as support coming into that. It depends how this trades, but clearly keep an eye on how we behave around those 2050s. Interesting level for silver. If we look at gold, again, our assumption was that this was going to rotate back higher, back into the 1300s and highers. We're still talking about 1350, 1400, and what we discussed was the possibility that we are trying to witness a possible range shift here as we're trading 1250s, 1300, 1350s, And as we came back down, we said, okay, if we start to get aggressive daily closes below this level, we get a weekly close below, we could see an attempt of a range shift, even though we'd remain buyers, really looking at these dips to hold ultimately, especially with the way the ES was trading at new highs. We'd have to see if the range shift was confirmed. If not, once we start rotate higher, we said clearly no change, still 1350s top range break above this 1300, especially if you don't get aggressive protection of that 200-day. We expect those 1350s will come into play. So the big question going into the week is how we behave now at 1300s. As long as we continue to hold those 1300s, 1350s will be calling. You need to respect that because that's going to be the top end of the range. But again, this looks like it's potentially setting itself up in play for opposite range shift and for a move back into the 1400s. So going into the week, at least right here, we're still stuck at 1350 top, 1300 mid, 1250 bottom. Break above, we'd expect those 1400s or at least the test of those highs to potentially come relatively quickly, but at least to confirm and consolidate this mid tone that's come back into the gold. In terms of Forex, what's going on Forex? So basically, let's look at a couple of charts. Cable is still stuck in that pivotal level, and this is a weekly chart. Basically, those 1700s are really important, right? 170s, 170 30s. If you look to the left, you can see basically it's very important level because even I believe if we were to flip over on a monthly, you could see we always got very aggressive reaction, whether it was the breaks, whether it was the holds, etc. But this has been a key pivotal level for a long time. So do not underestimate the importance of how we're trading here, right? And the way we were playing here in this rotation higher, we expected this to break those 170s. We expected this to continue to hold a bit tone, especially because you see on all these past trusts, we got aggressive protection earlier. And here, the way we were looking at it, our assumption was not, bar the Carney, that basically the protection had come in here, right? So once this gave and once everything started to rally on Carney, fundamental range shift, it was only a matter of time before we break. Now, it doesn't mean that we have to hold above that level, but it looks like that's what's trying to play out. So if we're going to go back onto a shorter time frames, or at least the 4 hour, the one we were looking at, the move that's in play and we've been talking about is basically move back into the 170 120s and sloppy hold of this whole 50 back zone, protection of this support, the box. We discussed this at detail in the previous recordings. Basically, the move back up, what we said is, you see we're holding at highs. As long as the market doesn't get traction below the spike high, continue to catch a bid, choppy action on Thursday, Friday, and a slow end of the week. And you see, we tried to take these levels out, couldn't get any traction, right back up to the top side. Now, as long as we're holding above these highs, expect this to continue to grind higher for those 1720s. So the way we're looking at it, pivotal level from a daily close for the week, 69.90s basically. As long as we close above here, continue to see this mid tone, try to take a stab and complete into the 170 120s. Daily closes below the 169.90s, then we could easily see a retracement back into this base support, which is going to be really key support to hold this upside rotation or potentially change in trend, right? But still here, there's still a lot of support on moves down. You have to respect that. It could get choppy, but again, it looks like it's still bid for now. In terms of yen, USD, JPY, not a lot's going on here. I don't think it's particularly interesting. The way we're looking at this inside 102.60s and 101.80s, this is what we call big chop zone. So don't get confused about velocity of move inside range. As long as we're stuck here, sellers will be defending this descending trend line, would be defending this pivotal levels. Buyers will be defending the 200 DMA. So not a lot to do here. I expect the shorts have already made their bed. The longs have already made their bed. So they're already in position. So very choppy, very little edge inside this range. We'll have to say which way we break, but it's still holding this base support. So we'll have to see how that trades. And you see a similar kind of action on Euro JPY, right? If you go on this Euro JPY, we tried to get this break below the 200 DMA, took out some weak longs, below these lows, and then bam, rotation back higher. Now we're stuck at this 200. So keep an eye on what happens around this 200. As long as we close below that 200 and below the 139.00, there's a chance that the market will continue to try and take a stab back at the 138.00, 138.17s, 11s, basically these lows. But if we start to get daily closes above here, we'd expect those 140s to come fairly quickly, right? So 140.40s to the upside, mid pre-rush at these 139s, and then those lows will be the downside, and a break below there will open up a potential move back into the 136s. But at the time being, it still looks relatively supported, okay? Now, Kiwi, what's going on Kiwi? This is still in that long move. The long move is for a move all the way back into that 189.50s, that 123 extension of the 50 back right here. Confluence with the two moving averages holding. So here, expect to see a lot of choppy action inside this range. You know, a lot of people will be debating on whether all the rate hikes are already priced in or not. Ultimately, we're not too focused on that. We're just focused on the technical. So the way we're looking at this is similar to the yen zone. Much to do about nothing inside here. Don't get confused about velocity of move inside range. What is important is a daily close above those highs for a continuation back into the 123 targets, or a daily close below this support that held for potential retracement all the way back into those 85. So really downside 85.00, upside 89.50s, and right here we're stuck pretty much, and we're looking for direction, okay? And that also brings us into Aussie, where you see it's kind of hovering in this upside. It's trying to hold the rotation. It's very choppy. We've been talking about for ages about those 93.30s being pivotal for Momo and flows, and that's what's still happening. So above 93.30s, bullish, below, bearish to the upside. You see you've got shorts defending these highs. You'll probably have longs defending these lows. I don't think it's particularly interesting unless you're already inside some kind of a trade, okay? And then last but definitely not least, what's going on the euro. So euro, let's get our daily chart on. So we discussed the fact that basically this was all in a zone. We'd expect a lot of people to buy straight this move inside this base support, right, which was a key support with stops below this low. So as long as these lows didn't get taken out, expect rotations to go back to the upside, right? So really what's going on here is that basically we continued to try to break below here, but we couldn't get any traction. Now we've just seen a little relief pop, okay, to the upside. Now keep in mind, it's still all about that Thursday Friday range, right? So this candle here is the Thursday, and then we've got the Friday. So as long as we trade inside these Thursday Friday range, it's don't get confused about velocity of move inside range. It's very tricky, you know, it could be very choppy. So basically the shorts are already short, the longs are already long, and we need to see this break out. So the way we're looking at this doesn't really change, okay? Of course there's opportunities inside this range, but from a bigger picture, right, any move inside here is just very choppy, as it could be noise. What you need is for the shorts to get traction, we need to get a daily close below, take out these lows below those 34.70s, and then we'd expect this to accelerate aggressively, potentially back down into the 132s, 131, so 200 pips to the downside or more. And if we get a daily close back above this 200 DMA and back above that Thursday Friday highs, then we would expect the acceleration to the 37.70s, 38s to be very aggressive too. So here, look for a lot of chop, and there are a lot of people I'll be talking about euro's just still going to go down, and there's a lot of people saying euro's based and we're going all the way back higher. The way we're looking at it, as long as we're inside this range, it's still inside that Thursday Friday range. And what do the odds do? The odds favor playing the range. So that means right out of it into the Monday, right after that week, is shorting failures at highs for a move back to the low range, and then low range getting long, failures to break low range for a move back into the upside of the range. So in terms of a bigger picture, it still looks like it's all about this 200, and we'll wait for the daily closes above or below 136.60s, 136.40s to guide us. So really not a lot of interest in the middle of the range, interest to the upside, to the downside, engaging in those kind of areas, but it looks like it's trying to base to rotate back higher, okay? So I hope that makes sense. I hope this was useful, informative. I hope everybody has an awesome rest of the weekend, wherever you may be, whatever you may be doing. Thanks a lot for listening. I'll see you guys on Twitter. I'll see you guys around. Have an awesome one. And again, remember, we're going into pretty much the last trading day, the last trading week of the month. So things could get a bit interesting, okay? Wish everybody the best of luck and see you guys soon. Thanks for listening. Bye-bye, guys.